Welcome back to Josh Trade Wars. In today's episode, we're going to show you one of the fundamental keys and when trading, and that is using indicators. Now, you might be asking, what are indicators? And I'm going to show you how to understand indicators and how to use them with examples. So let's go on. Now, what exactly are indicators? Indicators are tools that use past price and volume data to understand traders help understand the market. They show things like trends, momentum, volatility, making it easier to spot possible trading opportunities and decide when to buy or sell. So right here we have different indicators that when I first I started using and did research on. We have a VAP, Bollinger Band, MACD, volume, like which you already know helps you look at market participation. And if you want to research about indicators, you can just use them, like just research them on your own. But right here, I think these the basics are the best ones. You can use complex ones, yeah, and they might help, but the basics are just as useful and just as good. So I actually stick with the basics. There's three basics to what I use and what I stick with, and I'm going to show you them soon. But right here, we have VWAP or VWAP, volume weighted average price, showing you the average price where most of the buying and selling is going on. Bollinger Band, volume, MACD, and a MACD is very useful as well. Let's go on. And here are my main indicators. First one, we have the volume. The volume indicator helps you see if the volume of that candle is strong or not. The volume bar below the candle represents the volume for that exact candle. I use it by seeing if there's a lot of volume on that candle, telling me that I can ride on the momentum on that candle in whichever direction it's going. So if there's a lot of green candles, let's spot this right here. If there's a lot of green candle, that I know there's a lot of buying in that candle. There's a lot of people buying. So I'm gonna ride the momentum. I'm gonna ride the wave that's bringing that candle up. And if I bought right here, you can see it did go down a little right here, but it went high. It still went up high, and it never went below the point where I was losing money. Because let's say I just bought right here, right there in the opening. Actually, no, this is the opening in the close. Let's say I bought on the close. It went down just a little right here and here, but not too much, and it went up, up, up. So volume is very useful. You can tell if there's a lot of momentum in that candle. You can ride that momentum. Next one, we have the EMA, and there's three different EMAs. There's EMA 9, 20, and 200. Now, you can put 3, 2, 1, 4, 5, as many EMAs, but most traders, a lot of traders use the 9, the 20, and the 200 EMAs. The EMA 9, 20, 20, 9, 20, 200 refers to three exponential moving averages with a time period of 9, 20, and 200. These are commonly used in trading to spot trends and possible buy or sell signals. The 9 EMA reacts quickly to price changes, short term. The 20 EMAs shows a more balanced view, medium term. And the 200 EMA helps identify the overall long term trend. This helps by seeing how the stock might react when it reaches the EMA. So let's go to the 9 one. The 9 one over here, you can see at points like right here, where blue circle is, it reacts to it because it's fast moving. It reacts like that, it's fast moving. It keeps up with the stock. The 20 EMA is medium moving. It can still react. So you can see points right here or even here. No, sorry, that's here, over here. It reacts to it. And this is the view up, the orange line is view up, and I'll get into that right now. Right here, we have it right here, and then we have the 200. You can't see it exactly, but the 200 is long term. So in the long term of that stock, it was moving up because the 200 is moving up, and it went down. And if it breaks it below, that's a breakout, and it could react as a support or resistance. So if it supports, it will bounce back up. If it's resistance, it will break out of that 200, and the 200 will now become a a resistance. So the EMAs can be used as support and resistance trends. They can be used as trends, like I said right here in the definition. So they're really, really useful in telling if the market's going up or down, if there's going to be support or resistance in that stock. Next, we have the volume weighted average, or VWAP. This helps me refer to an average price of a stock over a certain period, but it also factors in how much of the stock was traded volume. Traders use it to see the overall trend and spot possible changes to buy or sell by seeing if the stock will be supported or resisted. Same as the EMA, but like I said, it refers to the average price of a stock and it's over a certain period. Also factors how much the stock was traded volume. So this is very useful because you can see right points right here or even here that it was used as support right here, resistance. Once it broke this like a trend line, once it broke it, it became a breakout and started going up and up and high. And you can see right here, I could use my strategy, the pullback strategy, when it went down a little, when it went up down a little at that red candle right here, then went up, down a little, went up. And that you can see, it's a very useful tool. And you can see on this one right here, the VWAP, that it reacted on this price right here. See, this was kind of like a false breakout. It broke, then went back down, and then it broke again, and it went back down. So, sometimes you gotta be careful. You can even see it 2 points right here. It reacted right here and right here. Now you don't now for settings for VWAP, you don't have to change any of the settings. You can just I recommend just change the color. That's if you want. That's optional too. I really don't mind the colors. And for EMA, I will show you how to set that up in a moment. Right now. All right, here we are in trading view. You can see here this is Coca-Cola. We're in a monthly. Let's switch to the minute time frame, or let's go into Apple actually. Why not? Right there. So you can see we're in the Apple minute time frame. Now, what you want to do is click on this button right here. Hover over it. It says Indicator Metrics and Strategies. Now, you can use indicators as strategies, but they're not really good, so I don't recommend. I recommend just finding your own strategy, depending on what kind of person you are, how you are. So you can be a long-term trader who trades for a long time, or you can be a fast-term trader like me that trades really, really quickly. So when market opens, I'm ready, I'm quick, I'm looking what's happening, and I'm ready to trade. Others, they wait patiently. So it really depends on you. But let's see how to put on indicators. So you click on indicator, and I start all these indicators. If you want, I recommend trying all these indicators. So look at all of them. This is all of them right here. And I recommend trying to understand and use them. So for now, let's look at the MACD. The MACD is also another indicator I use. I forgot to put it into the thing. So this is the float. Float is one of the, and in one video I'm gonna break down every part of my strategy into one video. But for now, let's ignore the float. We're looking at the MACD. Moving average convergence divergence. So the MACD helps see how the market is going. So you can see in areas like this right here, it was moving up high, signal showing you by the green or the blue line going up. So when the blue line is above the orange line, that's indicating it's going up. But as you can see at moments like right here, in these two spots, that the market was going down. See, up, down, and down, and then it started going up a little at this area, or in this area, this whole area, it started moving up. But then we had the ultimate crash right here, signaling this right here. Then we had a movement going up, signaling right here. So a nice little cute strategy you can use is when the blue arrow crosses the orange, or where the blue arrow is below the orange, you can use that as a sell. And when the orange line crosses the blue, or the blue line is above the orange, you can use that as a buy. So you can see right here, orange, the blue is now above the orange, buy, the blue is now below the orange, sell. So you can use that. I actually recommend using that as a starting strategy to get used to the market, and over time you will develop a more better and strategic strategy, so you can become better. But yeah, MACD, you can activate like that. So you just press indicator and press whatever. For now, we're gonna put EMA. Well, we gotta actually, for trading view, you can't have multiple indicators. So we're gonna take it right here, and we're gonna take out volume as well. So let's go into EMA, and now we have EMAs. So you see we have 4 different EMAs, but we only want 3 because most traders use 3. So you're going to go into inputs, EMA 1, EMA 2, EMA 3, EMA 4. Now you don't want 4 EMAs, so just take out EMA 4, or actually 3. Take out 3. EMA 9, there we go. EMA 20, yes, that's the one we're using. And EMA 3 is the one we're not using, so we're gonna leave it. And EMA 20, EMA 4 is 200. So it's already put on the sets we wanted. 9, 20, and 200. Leave it like that. You can change the colors if you want. You can change the thickness of those lines. You can see how the red is more thicker than the blue and orange, because the EMA is a more long term and more stronger like trend. So I recommend having that always in sight. You can see it's even reacting a little bit right here. It's crossing. Now Apple might be going on down. You can see how Apple was going up for this entire time, but then it started going down, so it started crossing then the 200 EMA. So we might be entering an event where Apple is going to go down for a little while. Apple might continue up, or it might continue down. But if you're a fast term trader, this can be used as a long term. But if you're a fast term, it's always good to look at the red, even if you're a fast term trader. But if you're a fast term trader, let's look at the red and blue. You can see they reacted at moments like this, where it bounced off the blue right here, and again right here, broke out right here. Let's look at moments where it reacted to the orange. You can see right here, even right here a little maybe. Yeah, you can see even a false break on the arm right here, bounce and was acted as resistance. But yeah, that's it. So let's go back into the slides. So those are my indicators. I didn't put the MACD in this picture, I'm sorry about that, but I showed you the MACD and I recommend using those indicators. Those four main simple indicators help me to trade every single day, and I still use them today. In next videos, I'm going to show you how to not be emotional. So there's a mindset you want to have when becoming a trader. I'll also show you my strategy one day, and I'll show you things like level 2, which is not literally like a level 2, but more complex, time and sales, the live action of the market, and many more information so you can learn how to day trade yourself. That's it. Thank you for watching. If you liked the video, like, comment, subscribe, and I'll be back with more tomorrow.